Welcome everybody to Crypto Consciousness. David here, and I have got some updates for you. If you watched last video that I did a recording, everything is played out pretty much to the T. So we're going to go into that now. If you're interested in knowing what my thoughts are on Bitcoin, because it does reflect the rest of the market, then stay tuned and watch the video to the end. Make sure you hit like, and obviously you know the rest about subscribing. But most of you guys already are, so big up to the community that we've created already, which is really exciting. It started off with just a small group of friends, then it started off with people interested in getting into investing, and then it branched out to even more. And I'm just doing a recording. I'll talk to you later, okay? And now it's getting bigger, the community, and the more time that I can devote to it, I'm sure it'll just continue to grow and make more and more people realize what they're doing with their capital and growing it, but also learning to stay really strong throughout tough times. That is a big lesson that we've all been going through for the last 2 months. When the crypto market is in a tough situation, we've got to get tougher and not panic. Because the one thing you need to understand about cryptocurrencies are that there's still not a huge amount of money in it. Even though we're talking nearly $2 trillion, we're not anything near the $11 trillion that gold holds, or the hundreds of trillions of dollars that derivatives hold and the real estate market holds. So really we're talking about a baby here. The latest technology and the future of digital, let's say, transactions, digital money, and even just tech, like as in voting technology, tracking technology. There's just so many things that cryptocurrencies can do if you look at the scope of it, apart from DeFi and NFTs and creating contracts that people can trade that actually lives up to something that's non-fungible, like a house or anything. So the sky's the limit there. Use your imagination and you'll find that there's actually a huge potential of growth ahead of us. And there's been so much money coming into this market, even though we'll talk about the extra. Like if you talk about 2 years ago, there was only like $200-300 billion. We're talking now $1.7 to $2 trillion in money that's come in. So there's an extra $1.5 to $1.7 trillion that's flooded the market, and that we can really tag that to the the big institutes that are coming in, the fund managers. They're realizing that this is something they can invest in, that it is safe. Sure, it's volatile, but in volatility, all traders know that there's money to be made. So going up and going down, if you're a trader, a day trader, and you're really, really good at it, and you've got years and years of experience, and you know what to look for, you've got heaps of charts, you've got indicators, you're just really intuitive with the whole process, then yeah, you can make a fortune. And that's what a lot of the manipulation that's going on at the moment knows how to read, is the big money coming in and out. We've had a lot of fun, and what we really need to do is look at it on a technical level and look at it on a fundamental level. On a fundamental, there's been a lot of bad news from China banning it, all these billionaires saying this and saying that. Honestly, that stuff there, it's just a short-term effect on the market, so you can put all that aside. Fundamentally, this is the new technology of the future. Do you want to be a part of it? Do institutes want to be a part of it? Yes, most of them do, and they're realizing that this is what they need to be getting into. So they're slowly behind the scenes getting into it, involving, some of the smartest people in the world, particularly around technology. And so what we've seen lately is a dip in a market based on a sell-off that's basically occurred based on, a healthy market getting really, really high up. So let's keep it technical for a moment. So we know the fundamentals are pretty solid. Everyone in crypto on YouTube, everybody is really just confident on this market, this bull market not being over. And it's highly likely that we're going to just enjoy this recovery coming up soon. Whether it's now or the next month or two or even more, then that's yet to be decided. But what I can tell you, just by looking at the charts, let's just use pure technical analysis. We had a huge run up. After we broke out of the 10,000, we went up to 20,000, and then we just busted out above that. We kept going. We had some beautiful, healthy corrections, opportunities to buy in, some dips. Then boom, we smashed past that top, and we kept going up. And then we had a big correction, and we kept pushing up. Now, something you can note here already is the distance from, let's say, the previous top, which was here, to the next top was 39 days. Okay, then the next top to the next was 43 days. All right, so that's getting bigger. That's expanding. The next top to the next top was much shorter. So we have 20 days. Okay, and then we do that again, and we recognize that the next one was only 30 days. And just one more time. We're losing steam here, and it goes to 26 days. So the time frame by W.D. Gann was one of the critical components of the market, and I did study his work, and I found that the expansion from 10,000 to 20,000 was getting bigger, and then bigger, and then bigger, and then we had smaller. That was already one indicator that things were going to change. And the next top is actually a lower top, and then we had an equal lower top. So we struggled there into that apex, which we busted out, but that time frame was a short time frame from here then to the next top. So we're talking 26 days. It got shorter. We knew that we were losing the strength, and then on top of it, the confirmation was that the tops were getting less height, and so we can do that really by measuring from this top to this one, and that's probably not the right way to do it. Let's try it like this. Boom, to there. Okay, so we've got one really long top there. So that was a pretty big push up, you can see. And now that one there is shorter. And then if we go again from one top to the next, massively shorter. So you can tell just by fundamental technical analysis that the tops are getting a lot weaker. So then when we see almost a few tops here where I actually thought we might be double topping out, we can see that there met some massive resistance. When we busted out, we were hoping and we thought that potentially we're going to continue on, but hopefully take a bit more of a diagonal rather than a parabolic move up to the upside like we did back over here and back over here, which lasted a very short time. And if there was a lot of indicators that actually said, you know, we're quite overbought, the RSI, the stochastic RSI, said we're just way overbought, it's time for a breather. And so we saw a big correction, and I called the shots here. I said, look, you can buy in at the breakout. If we go to 90, so at the time was 75,000 US we were aiming for, which was 90,000 Aussie dollars. I said put a stop loss here on the breakout, and if you did follow that, you would have been stopped out, which is good because then you protect your capital, and you would have seen this downward motion. You would have thought at this point here, hopefully can everyone see me and hear me well, by the way? Just want to check in. Cool. So when we got down here and you saw the market recovering after this double bottom, some people would have been going, oh, you know, this is, you know, it's just going to continue up. And so they freak out and then they buy in, and then the market manipulators tank the market. And I can talk about that. We did talk a bit about that in the Wyckoff manipulation charts, which this is following beautifully. And at that point there, once again, when it breaks off the resistance line, it just broke through and went down heavy. And we've been in this sort of downward channel for a while. Now, today there's a lot more optimism. If we go into the charts, let's go into CoinSpot. Let's go open up a lot of green in the chart today. So hopefully everyone's feeling that and they're feeling good about it. Where are we at? There we go. Let's get more light. I think you need some more light there. Okay, so here we go. Look at all that. Beautiful. Beautiful. Ethereum really shining today at 11% increase. But, you know, let's look at the charts honestly and realistically. So what I did in the last video, I showed you this potentially coming up to this resistance point and hopefully, well, most likely rolling down, which we did. But hopefully bouncing off the previous top here and going through, busting through. That hasn't happened, and that's perfectly expected because we have seen a lot of weakness in the market and the bears getting really, really strong. So what's actually happened, we had a bit of a breakout, really, and then we just came straight back into this channel that I've drawn up. And you can see, like, today looks pretty optimistic, but I don't think we're still out of the woodworks here, because if you look at this, let's go into the 1 hour chart. Actually, no, we'll stay in the 4 hour. So you guys don't need to know how to do all this stuff, but at the end of the day, that's what I'm here to do, explain it, and hopefully make it easier for you to just get it in there so you have an idea what's going on. Have a look at all this resistance. Hits it, comes back down. 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 So this is a channel. When we busted out, a lot of people thought, awesome, we're going up. It's really good. But no, we just push back down, back into that area, which the market makers are really keeping us in at the moment. And that's really simple to do when you've got billions of dollars in exchanges to continue pushing prices down. Now, usually the reverse is going on, even though it looks like, see, that looks like the buyers are in control, but it's actually the shorts. The market makers are buying their position to get everybody excited to buy in, but then they dump a whole lot of coin on the market. And then people start to sell off. It hits stop losses, and they keep selling off. And then the fear kicks in, and they get basically a better buying opportunity down here. So they use a bit of money, quite a bit of money, and then they capitalize in the liquidation that occurs down here because everybody starts getting fearful and starts selling. And that's the big mistake that amateur traders tend to do in moments like this. They freak out because what you need to understand, when there's a dump, there's a pump. And when there's a pump, there's a dump. So you've got to be really try to build that wisdom within yourself to know that these things happen and it's part of the market. But if you're new to the market, obviously you're expecting to not have such a scary ride. But this is the market we're in, and that's why we can make such good profits. Holding tight is a really good strategy in even from 4 years. Holding for 4 years, it's proven so far in the past, if you look left, that anyone that bought 4 years ago is now majorly up, particularly in Bitcoin and then a lot of altcoins as well that have been around that long. Some obviously not, and that's expected. So make sure you're only investing in really solid projects that are here for the long run. You can see my scribbles in the last video. It has pulled back, a little bit earlier than my squiggle, but that doesn't matter. I wasn't going off time. I was just going off the pattern. And you can see here that I predicted pretty much just a pullback and a rollover. Now, what we're hoping to see is this push up in through the market. One thing I was just explaining though is all this resistance in this channel has come back in to keep us there. It looked like we were busting out here if you did a different line, but I like to keep it at the very top of the line just to show us if we're actually breaking out or not. So over the next few days, we do hope to see a push up through there, but most likely we'll see another downturn. Is this a big downturn? We'll see. There's no point trying to predict, but we've just got to prepare. And that's what I like to do, is just prepare for outcomes. If you're scared, you can put a stop loss in. If you're wanting to trade this, you can literally just buy in when it hits this bottom line, sell it when it hits the top line. And here you would have sort of gotten upset. If you're not a short trader and you're just into the buying and closing the position with a sale, then you just wait till it hits that line, buy it, put a stop loss just below that resistance line or support line, let's call it, and then hopefully it goes up, which it did a few times. So once it hit this spot here, the problem is people get stopped out. For example, here it went up and then it really took out stops. But you can see that we wouldn't have had that channel yet, so we wouldn't have known, we wouldn't have taken that trade. So what we would have done is waited for about 3 points of confluence touching. 1, 2, 3. Let's get that. 1, 2, and 3. So now we realize we've got a channel. We've even got down here some. And let's get rid of that drawing tool there. Here and here. So you would have seen there's a channel forming. If you're into short trading, like in Bybit, then you would have taken a short here and put a stop loss just above that line. And then once it hit that line or just before, you close your position. Then you reverse the position and you buy. Once it hits the top, you sell, close the position. And so here you would have been stopped out because it would have pushed up. And that's probably what we were seeing here, is a reversal on the traders because a lot of retail money was going out at this point. And then from here, you would find that it got back in, and most people were hoping that it was going to bounce off, like I was saying here. You get a bounce off and off it goes, but back in it goes. So if it goes through, then you do your short again, and then it hits that line, you buy. And so you can do that on Bybit. If you haven't got a Bybit account, you can check out my referral links in the comment section, and you can look at getting a deal on that. The latest deals that everybody on YouTube's offering. Let me just get rid of that. Okay. Now, let's take a look at the daily. So remember, Bitcoin is currently at a huge pullback of 50%. If you look at buying opportunities, that's a really good opportunity to buy. It doesn't mean that it won't come lower. There's a lot of talk that it will hit 20,000, and that's probably, a really good point for it to come back to, because that was a previous all-time high in previous market. We got 14 there. This chart's not showing it, but yeah, you had a $20,000 top from previous. So usually markets come back to meet that, and a healthy market will take its time then to rebuild that and continue up. So you look at history, and you can see most cryptos do this formation. We did see some signs as well where we saw the head and shoulders forming. We saw a break of resistance of previous bottoms here, which give us this current channel. And now we're looking at this resistance being broken, and we really want to see, this is what I'm hoping to see for everybody's sake who's into Bitcoin and wants to start seeing the prices climb up, because the market makers might not want to bust down any further. So what we want to see is a break of this resistance line, which we're currently above this bottom one here, where we've had confluence there and there and there. So we're above that one, but we really need to get above this line here. This has been strong resistance, and we need to just sort of go in here and push through. This may happen, but if markets are, makers and institutes really want to drive the price down, they can use some big money to sell off and create more scared traders and people selling their positions so they can buy lower. And this is possible with a few $1 billion. You can do that with Bitcoin. So this is why people want to regulate the market, but that to me still doesn't really cover it. What we need to see is a lot more money coming into this, into the space. Maybe some regulations, yes, definitely. But then we really just need the people to not get scared in times like this, and to know the technology that you're investing in. So this is what you're really ultimately doing. You're putting your capital into a project that you think is going to have some real world solutions, and Bitcoin seems to be a clever idea, and then everything else that's been developed after that in the crypto world has also got some really good potentials for things like Holochain, Theta. We've got Zilliqa, Digibyte. I mean, if you look at Digibyte, it is a sleeping giant. It is better tech than Bitcoin, and it's up to you to have a look into that to confirm that yourself. But we've got a lot of good projects in the space, and we've got Polkadot trying to come through, Cardano. Ethereum's just slowing right down again with their second layers, and they're increasing the speed of transactions and so on. So that keeps delaying the process of seeing a really high function, low fees network. So potentially that's where Cardano next month will come through, and then eventually Polkadot. So people watching that space, it'll be pretty exciting to see July finish and August start. But for now, where I want to see Bitcoin go is I want to see us crack through here and maybe just come out sideways for a little bit and then go through. If you have got some money on the side, put a buy order in around the 20,000, 21,000, I'd say, even 22, 20 maximum, 20 and a half US dollars, and get a buy order in saying if price drops to, buy so much Bitcoin, whether it's a percentage or a whole few or one or more, up to you. But you decide, just get that order in so that if it does drop, you're ready to buy in. Doesn't mean it will be executed, the order, because there's probably a lot of orders already in place waiting for that drop. But it does give us an opportunity to potentially get that low price. From there, let's have a quick look. We've got Ethereum also with a 50% drop, or a bit more than that. Yeah, we went to as high as 4.5 or 4, and we've come as low as 1700. So yeah, a bit more than, let's call it 60% drop. But what's good is there's a previous top there, a few solid tops there. So we're getting supported around this area here. A lot of charts look like this at the moment. It's a really good time to buy in crypto, because sure, in the short term it might go down a little bit more, but your multiples are much stronger. For those who bought up high, this is the real chance to buy in. So if you bought Holo, near the top somewhere around from above 2 cents, you're currently now at like, what is it, half of a cent, not even 1 cent. This is a great time to buy, because once it starts to climb back up again, once you hit 3 cents like it did previously, that's a 6x from a half cent to 3 cents. That's 6 times, so 600% profit, or 500% on top of your 100. So, you know, start thinking like that. You know, if you can chip away at it, like if you're bought in at 2 cents or 3 cents, which I know some of you guys did, because you never want to buy when it's parabolic. It's just, it's absurd, you know. You can see them sometimes just keep going, but it's not always going to be, it's not going to keep going most of the time. So we have to be realistic and sell some of our position to capitalize on profit. But if you bought it when it was really, really cheap, when I was telling everybody years ago, you'd be still up 30%, 30x on this position. So you're not really worried about that. But if you did buy up there, let's say you put $1,000 on, if you put another 500 now, you're going to get 5 times more, 6 times more tokens. So it's worthwhile doing that and investing in it, because then it will balance out your losses. So as it starts to go up, you only need it to go 1.5 cents so you can start profiting again from the previous purchase. So start thinking smart. If you have any positions in losses and you've previously taken gains, this time of year for tax, you might want to sell and realize your losses so you don't have to pay so much gains. It's not really, it doesn't make any sense to carry forward losses but have to pay gains. So you want to start just sell it on the spot. A few minutes later, you can buy it on the spot. And this is not financial advice. This is just my opinion and what I'm doing, so that you can balance things out. And it's, at the end of the day, that's really just being sensible about it rather than being a hero and wanting to throw money around. So anyway, I hope this has found you guys, I hope this is useful to you guys and it's found you well. If there's any questions about today's video, please ask me. Let me know what the quality's like to you guys. I'll also let you know just quickly as well, there's some really good bargains still out there. Once we see Bitcoin bust forward, look, Theta's come down to $9.50. What else? We've got rYVvK really cheap. DeFi rYVvK $288. We've got T-Fuels pulled back to 57 cents, went up to as high as 90 cents, so that's still a good buy. BitTorrent's cheap. Kasuma $262. So there's a lot of good projects. Thorchain that are now affordable. Obviously we're up on 16%, so you don't want to be buying today. I'd be watching the rest of this week. We'll probably see some red candles after this green day, because the market makers, they like to mislead the market. They'll send us up for a bit and then send it down again. So if you're worried about losing any more capital, put a stop loss in. That's what I do. But again, like I said, if you got in really early, you're not really too worried. You just sit tight, wait for the market to recover. And as we know, every 4 years, the market multiplies. So yeah, that's all I'm going to say for today, guys. I will see you in the next video, and take care.